Hey guys, Daniel here and welcome back to the Finance Channel. Here today we're going to be talking all about Shift Technologies stock, ticker symbol SFT, and what to expect in their earnings, which are coming up this Monday, March the 8th, after the closing bell. So if you don't know what Shift is, I'm not going to be talking about their business model in this video, but I have a separate analysis video on Shift. I'm going to make it pop up as like a pop-up near my head here, and it's going to be the first link in the description. So if you don't know what Shift is, watch that first and then come back and watch this. So in terms of a format for this video, first we're going to go through what I'm expecting and what to watch during this earnings call. Then we're going to go through what I'm doing with the stock in the short term here. And then we're going to go through my long-term price targets for Shift, which is quite exciting. We look 5 years out and kind of get a sense of where Shift should be trading out 5 years, or should be trading at 5 years down the road. So again, the earnings call is this, or rather the earnings report is this Monday, March the 8th, 2021. And there's also a conference call at 5 p.m. If you want more information on how to access the conference call, check the description. I'll have a paragraph there on how to either call in using your phone or actually tune in using the investor relations website. Those are the two ways you can call in. But obviously a very big day for Shift, this earnings report. I think it'll be very kind of fundamentally changing for Shift and stock price wise as well. And we're going to go through why here in a second. But before we get started, if you are new here, make sure to subscribe. I will be making kind of an update video after Shift reports their earnings, going through pretty much all of my expectations going into Shift's earnings beforehand and what they kind of play out to be. So make sure to subscribe to see that. And yeah, let's get going, guys. So in terms of a revenue expectation, management in their Q3 report said they expect around $72 to $75 million in revenue, which is 163 to 174% growth year over year. Just absolutely huge growth when it comes to Shift, and this is one of the reasons why I like it so much as a company. So I see them being pretty in line with this revenue. I mean, when it comes to revenue, I don't expect any challenges to come with this. It's really profitability that's going to be a big kind of key decision maker when it comes to the stock price going forwards from earnings. But I think this will be very easily achieved, and they might honestly beat. Revenue isn't too difficult for Shift to hit, but again, it's that profitability that we'll talk about in a second here. Now in quarter three, revenue was around $60 million, and cars sold at the time was around 4,046. Now this is important because this lets us calculate the total revenue per vehicle, which at the time was $14,805. I think this will be kind of stay stagnant in terms of Shift. I don't think a lot of their growth is going to come from an increase in the price of their cars, but rather just an increase of the amount of cars sold. So using this number, $14,805, and using Shift's revenue expectations of $72 to $75 million, we can estimate around 5,000 vehicles delivered for quarter four of 2020. Now, I'm pretty certain it's going to be around this $5,000 range. It might be off by maybe 100, 200, but I really think 5,066 is pretty darn close. We'll see how it ends up playing out on Monday, but this is one kind of number to watch, the amount of vehicles delivered, as it will really dictate their revenue and their growth going forwards. So the next thing we have to talk about here is gross profit per vehicle. Now, this is essentially the amount of money they make every time they sell a vehicle. Shift does the process of buying someone else's vehicle. They kind of clean it up, take some nice photos, they mark up the price a little bit, and they sell it. So this is essentially how much they mark up that price. They buy a car for $10,000 and they sell it for, let's say, $12,000. That's $2,000 in gross profit. So, in Q3, gross profit per vehicle was at around $1,265. Now, I personally expect this to increase pretty substantially over the coming quarters and years, and it's going to be one of those things that lets Shift get to profitability. And again, Carvana, one of Shift's biggest competitors, an absolute huge kind of monster in the space, worth like $50 billion. They said, since going public in 2017, online used car retailer Carvana has boosted gross profit per unit to $4,000 from $1,000. Now, why is this important? Carvana is, in my opinion, where Shift could be at a few years down the road. Now, obviously, Shift is making around like $1,200 per vehicle. I don't think it's going to increase to $4,000, but this really paves a path for Shift to increase that gross profit per vehicle pretty substantially. And it's one of those things that allow them to get to profitability quite soon. And it's one of the things that is going to let them be a pretty profitable company in the future. So again, I expect this to increase somewhat this quarter. I'm not expecting too big of an increase, but we want to see something bigger than that $1,265 figure. So that's, again, something to watch. Gross profit per vehicle. We want this to go up because it means more profit per vehicle sold for Shift. So advertising expenses. Now, this is something huge that we have to watch, guys. This is the thing that actually tanked the stock last earnings report after Q3 earnings. Revenue growth was great, amount of cars sold, great, profit per gross profit per vehicle, great. What killed them was the advertising expenses. Due to being kind of like a newer company, they're really trying to get their name out, so they're spending a lot of money on advertisements. Now, this is completely fine in my opinion. As a new company, it is really important to get your name out there and to really try and compete with those big dogs. I feel like the used car market is very easily kind of disrupted since everyone is price shopping. If you're looking for a used car, you're looking for the best deal. And that really is a great kind of way for Shift to kind of just slide into the used car space by offering cars at a cheaper price than like a Carvana. Keep in mind, Carvana makes around $4,000 per vehicle. Shift currently at around $1,250, something around there. So that gap there is one of the things that will let Shift kind of just slide right in with the Vrooms and the Carvanas of the world. But again, that comes at an expense, and we have to keep an eye out on this going forwards. Again, social, general, and administrative expenses was $24 million, or 40% of revenue, up from 35%. The increase was primarily driven by increased marketing spending and an increase in expenses associated with becoming a public company. Now, these expenses associated with becoming a public company will probably start going away now with this earnings report, which is going to be good, but we want to see this, or rather these expenses decrease going into this quarter. This is one of the big things that could lead to either a pop or just a sudden decline in the stock price. This led Shift to lose around $23 million in the quarter compared to a loss of $19 million the year prior. So in my opinion, if Shift comes out and says, all right, we spent a heck ton of money on advertising and the stock drops 20%, that is an excellent buying opportunity, as they are essentially just going through kind of those growing pains of becoming a not new public company, but becoming a bigger company. They're only at like a $600-700 million market cap, and they're a newer company, so they got to get their name out, and that's one of the things that comes short-term pain in terms of profitability. So that's kind of one of the biggest things we got to watch here. And again, profitability, analysts expecting around 42 cents loss per share. Again, we'll see where this ends up fanning out, but if it's anything more than that, we could see a sudden decline in the stock price, even if they beat on revenue, gross profit per vehicle, vehicles delivered. Again, short-term noise. I really don't think this is a big of a worry. These advertising expenses, I think they'll go down as we go forwards into the future. So we also want to look at 2021 guidance. This is going to be a Q4 earnings report, annual earnings report, so we might expect some sort of guidance, at least for quarter one, if not for the full year, which would be really good, as it will give us kind of more sense of where Shift will be going kind of revenue-wise going into the coming years, and it will be great as it'll give me more confidence in my price target model, which we'll talk about in the later half of this video. So analysts are expecting Shift to do around $400 million in revenue for 2021, over 100% increase from 2020. So an extremely quickly growing company, and that's why I think Shift is such an attractive opportunity, the revenue growth. So, given that, I expect Shift, if they do end up giving some guidance, to, say, all right, we're going to do at least $400 million in revenue for the year 2021. If they do that, awesome. That's very positive for the stock. And if the stock goes down, that's positive for the business fundamentals and might be a reason to actually add to your position. And again, in terms of this next quarter here, quarter one of 2021, expecting revenue of around $72.6 million. Pretty in line from this quarter. Apparently, quarter one is generally a bit of kind of like a slower quarter when it comes to used car sales. So, the fact that they're staying flat makes me very bullish, and we'll see if they reaffirm that with guidance going forwards. And if we look at loss as well on the bottom line, they're expected to decrease their loss from around $1.75 loss in earnings per share in this year to a loss of $1.19. So again, I expect this to decrease going forwards into the coming years as they become profitable, in maybe like 2024, 2025. So the conference call. This is at 5 p.m. Eastern Standard Time. I really recommend tuning into this as, again, one of the reasons why the stock dropped so much was analysts, or not analysts, but kind of management, didn't really handle the conference call too well. And it was kind of funny, as a newly public company, they're going through those pains of becoming a newly public company and having to do conference calls, which is something they didn't have to do before. But, maybe with more experience from last conference call, I think they'll be able to answer analyst questions better and just make it feel smoother. Again, this was one of the things that kind of led to that stock price to drop, as it almost made it feel like Shift was a little unprepared. But again, this isn't anything worrying with the business, just the way that not the business, but the management team kind of looks in the eyes of the public. The Android app. Currently, Shift only has an iOS, an Apple app, that can be downloaded onto Apple devices. And it's very surprising that they don't have an app for Android, which is, the second largest kind of operating software for phones out there other than iOS. So we are expecting an Android app to come in the near future. And I really want an update on this, as it will just open up another kind of a bigger market for Shift when it comes to more customers and more cars sold going forwards. So what is the bottom line? Expectations are low for Shift. I feel like everyone's expecting Shift at this point to do pretty poorly when it comes to these earnings and really miss when it comes to their profitability. Now, these expectations, as they've been set low, could lead to a massive upside in the stock in a very short amount of time if they do come out and say, all right, we were less unprofitable than analysts were expecting, and we did better when it comes to revenue growth. That's something very big to watch. Expectations are really low in my opinion. Next, again, this might be the main thing to watch. Advertising spend. This is going to be huge, guys. Make sure to watch out for this figure. If advertising spend is high, that may lead to a giant plummet in the stock price. Now, in my opinion, this is very short term, like it was a couple months ago, and presents a great buying opportunity, as again, this is just one of those short term things that Shift has to go through. And long term, I expect them to be a very profitable business model. But in the short term, they're getting their name out, they're growing rapidly, and profitability is one of the things that we have to sacrifice for that. So, given that, I think the short term is kind of uncertain when it comes to Shift. It could go either way, but in the long run, I love Shift. I think this could easily be a $40 stock 5 years down the road. So when it comes to what I'm doing with Shift technology stock, Shift makes up around 5% of my portfolio. Now, this has actually declined as my other positions have increased in value pretty significantly, like Voyager, Tattooed Chef. Now, I would be confident to make Shift possibly around 7 to 8% of my portfolio prior to earnings. I might actually buy some more on Monday. And if it does come out that Shift wasn't as profitable as expected and the stock takes a nosedive, then I'm going to go ahead and pick up some more shares and make this thing around 10% of my portfolio. That's how confident I am in this company, and I really think that is just a short-term noise when it comes to that profitability. Long-term, this company is set up for success, and they're set up to compete with the likes of Carvana and Vroom. It's just a short-term that could lead to a bit of short-term pressure on the stock. But again, I love this company, I love what they're doing, and I'm expecting big things from them going forwards. So now, when it comes to my price targets for Shift, we can take a look at these here. I'm expecting, or let's take a look at the valuation first. Current share price, around $8.01. Now, what I'm going to do here, currently shares outstanding are around 84 million shares. I'm going to expect dilution coming to Shift stock, as they are currently unprofitable and will probably need to raise at least a little more money over the coming years. So I'm expecting dilution of around like that 20-25% range, and shares outstanding to increase to 100 million within the next 5 years here. So given that, current market cap of around $800 million if we use that kind of 100 million shares. If they do less dilution, that's more beneficial for the stock price. If they do more dilution, that's a bit more of a negative when it comes to that end target with the stock price. So next here, I have 2021 revenue of around $392 million. This is what analysts expect. So I've just plugged that into my model. And then now what I did here is I expect Shift to grow at an average rate of 62% year on year for the next 5 years here. Now, is it going to be exactly like this? No. I personally expect them to do $2.7 billion in revenue by 2025. I did a 62% kind of average growth rate. So these numbers in the middle here might not be completely accurate. I think this is something that's more realistic, and you can kind of see how I got that $2.7 billion figure, going from 100% revenue growth to 85% revenue growth to 70% revenue growth to 55% revenue growth to 40% revenue growth. And obviously, as the numbers increase, the percentage growth decreases. So I think this price is in that kind of decline in growth when it comes to shift from that 100% range to the 40% range. And I think 2.7 billion is very realistic when it comes to their valuation. Now, I have gross margin of around 15%. Currently, it is at around 6 to 7%. I personally think that they'll be able to increase this to 15% if they manage to get their gross profit per vehicle to around that $2,500, $2,700 range. Keep in mind, Carvana has $4,000 in gross profit per vehicle. So assuming that Shift gets around $2,700, they're still pretty significantly lower than Carvana. So they have that ability to kind of undercut them when it comes to pricing. But it also makes them a pretty profitable company. So then I have a net income margin of around 5%. I think that's pretty fair. I think revenue, or rather expenses related to advertising, will decrease as time goes on. And I think 5% is very realistic. Then I used a 30 price to earnings ratio. Again, I think this is very fair and could honestly be considered conservative given their massive growth. But I like to be conservative with my numbers. We'll experiment with a 40 price to earnings here in a second. So this gives us a price target of around $40 5 years from now, or upside of 400% in the matter of 4 to 5 years. Now, this translates to a compounded annual growth rate of around 38.2% over the next 5 years here, which is a very intriguing opportunity. I think these numbers are very, very realistic for Shift to hit if they manage to increase that gross margin per vehicle over the next 5 years here. This is why I think it's so important to watch that figure in a few days when they release their earnings call. It doesn't matter what profitability is at here today or even over the next couple of quarters. What matters is their gross profit per vehicle. How much money are they making per car? And how much money do they expect to make per car over the long term? I expect this to increase. And honestly, if we get to a place where it might be a little closer to Carvana, maybe 20%, this will be a little more on the bullish side. This will be around $3,600 per car in gross margin. Then we could possibly expect net income to increase to maybe 7%, which would then be, almost $56 per share. Or if we are maybe try 8%, obviously that's the upside. That's the potential upside when it comes to their profitability. I like to be conservative. I've got this. I think that's very realistic, and that gives us a good kind of return over the next 5 years here. Now, price to earnings. So I think 30 is a base for Shift, given their growth. Now, I don't think it'll be trading at anything under this, as the growth they're experiencing is so substantial that it would just not make sense for the stock to trade in a 20 price to earnings for any amount of time. If something, I could see them trading at a 40, which would again increase that kind of share price even more over the next 5 years here. Now, I'm going to link this kind of sheet that I have here in my description. It'll be one of the links in the description. If you want to, you can click on that link. There's like a little wrench on the top, and you could actually download this file and play around with these numbers with yourself. You can translate the different shares outstanding. You can look at a different price to earnings ratio, different net income margins, different kind of revenue growth. This is what I'm expecting. I think Shift could easily be trading at around kind of $40 per share 5 years from now, including dilution, which is why it is such an attractive opportunity and why I'm willing to push this position up to 10% of my portfolio. Now, if this stock manages to dump over the next kind of few days here, I'll buy more. If it goes up, I'm pretty confident with my position. I'm going to increase it a bit on Monday, as I am just so confident with this business, and I am really looking forward to this earnings call. So thank you guys so much for watching. I really appreciate you watching this video. If you enjoy this type of content, make sure to drop a like and subscribe if you're new. Anyways, guys, thanks for watching. See you later.